Edward Moya, Senior Market Analyst of Oanda. Edward, nice to meet you again.
Thank you for having me.
What's your opinion about the market situation?
Well, right now I think markets are extremely focused on the big rotation we're seeing into value stocks. I think that we're having surging treasury yields again, and I think everyone is kind of anticipating that tomorrow we will hear from Fed Chair Powell, and he will pivot from his position from last week and kind of acknowledge that the movement in the bond markets have caught his eye, and that the Fed is going to be watching the markets. I think right now you're seeing the 10-year Treasury yield has really had a strong move higher, and that could eventually become disruptive to the economic recovery. It could provide difficult conditions throughout different parts of the market, and the Fed needs to make sure that the ultra accommodative stance that they have is not disrupted. So I think you're going to probably see investors are waiting for that commitment by the Fed, and if we get that, I think the reopening trade is still going to remain intact. Right now, this market, it's focused on, it's vaccine driven, it's stimulus driven, and I think right now there's just still a little bit of a pause in the move higher for the all the indices, but I think in the end you're going to probably see small caps really outperform, and there's still a good move higher for U.S. stocks.
It's time for tech technologies, or we need to looking for another opportunities in the stock market.
Um, well, I think right now, and one thing I wanted to also clarify is too, when we take a look at what happened in the stock market early in the pandemic, really it was big tech that led the way higher. Right now, I think that what we're probably going to see is tech stocks are going to kind of act like consumer stocks. They're not going to be the one leading the charge higher. The reopening of the global economy is what is needed to really drive the small cap trade, and that's going to continue. Tech is going to underperform. I think rising yields are going to happen. I think what we're going to see is the Fed is going to kind of stabilize that current rise right now, and I think as we see the economy reopen, and it is starting to, you're going to have yields continue to climb higher, but just not at the current pace we've seen over the past couple of weeks. So I think you're going to see tech is going to struggle because a higher interest rate environment is a little bit disruptive for them. I think you're also seeing that the Biden administration is talking about wealth taxes, and I think the regulatory concerns for big tech is not going away anytime soon. So you're probably going to see the FANG stocks, Facebook, Apple, Amazon, Google, and Netflix. They're going to struggle, I think. Right now, they're really leading. They're the main reason why we're seeing the S&P 500 be down this year, and I think you're probably going to see that investors are going to still want to keep their tech positions. They just might kind of reduce the size that they're holding right now, and possibly re-up it. I think once we're deeper in the recovery.
How are you seeing the Bitcoin and this moment of the crypto active?
Well, right now it seems that every day we get a different big money investor or investment bank giving a big endorsement for Bitcoin. It's pretty amazing to see that there is still a tremendous amount of interest that is growing, and possibly going to capitulate, I think, in these next couple of months, and that is very positive for the space. I think one of the biggest concerns for Bitcoin has always been the regulatory environment. And yesterday we saw Bitcoin sell off a little bit on Gary Gensler's confirmation hearing. And Gary Gensler is he's expected to be confirmed as the head of the SEC, and he brought some comments about focusing on the fraud and money laundering, and just some of the negative aspects of what has happened earlier in Bitcoin's life. But I think people quickly forgot that Gensler is very supportive for cryptos. He's spoken about them countless times, and I think what we're going to probably see is that Gensler, his comments, were more attuned to his audience, to Congress, and you always see people be a little bit more skeptical when they're in front of Congress. And I think, though, all of his actions and I think his behavior has signaled that he is supportive for the crypto environment. He wants, obviously, it to be healthy and regulated, but I think we're not going to see a big event where the U.S. just completely says we're going to shut down Bitcoin. And that was one of the biggest risks over the past couple of years. So I think there is so much optimism that Bitcoin is probably in the clear for at least a year as far as major regulation. And that's what's going to allow things to still kind of, I think, go higher. There's just not enough supply. There's not enough Bitcoin to meet the institutional demand that keeps on coming. And if that happens, you probably see Bitcoin continue to push higher and have 10% rally days. And I think right now some of the frothy targets are 100,000. But if you continue to get major endorsements, I think that those figures will become the consensus if Bitcoin is still attracting that much demand.
Could you give us an investment recommendation for these days, for these weeks, that we could see different changes in our investment?
Well, I think right now the biggest I think hurdle right now for any financial decision, as far as for active traders, is what is going to happen with treasury yields. Really, that has dictated everything. That has had the impact across stocks, off the commodities, and for the most part, with the exception of today, Bitcoin as well. And I think what you're going to probably see is, I think there's a reasonable expectation that the surging treasury yields that should, I think, eventually stabilize. And I think if that happens, that's going to provide a little bit more optimism that the economic recovery is going to see steady stimulus and steady support from central banks, and that should continue to provide more opportunity, I think, for some of the traditional investments that have been punished. I think like gold is one that is likely to attract some type of demand if we see that move in treasuries end. And I think treasury yields will finish the year much higher from where we are right now. But I think in the short term, that move is going to be faded, and I think you're going to probably see gold outshine. And if gold is rising higher, typically we've seen Bitcoin do well in that type of environment. So I think there's a lot of emphasis on where treasuries will take their next cue, and that's really, I think, we'll know tomorrow in the middle of the day after we hear from Fed Chair Powell.
Thanks a lot, Edward Moya, Senior Market Analyst of Oanda. Thanks a lot for having this time with us.
Thank you so much.
Pues este vistazo a los mercados. Hacemos una pequeña pausa y enseguida volvemos con todos los detalles de lo que está sucediendo en esta jornada aquí en Europa.